Welcome back. Now, as the world reels from the impact of rising inflation and, of course, slowing economies, funding for startups has fallen across the globe. But research is showing that Africa stood out as a notable exception. Now, according to analysis by research firm Africa the Big Deal, startups in Africa raised over $1.8 billion in just the first quarter of this year, breaking a record established in the third quarter of 2021. In fact, Africa was the only region to record three-digit growth in the first quarter of this year, with venture funding up about 150%. That compares with a decline ranging from 3.7% in Europe to 43% in Latin America and the Caribbean. However, today, more and more stakeholders are pointing to the fact that few are questioning how those astronomical numbers were reached. Questions have been raised about inflated company valuations and uncertain or non-existent data. The fact is, as long as money has continued to flow into the market, investors have followed, convinced more by the trend itself than the actual business fundamentals or founder talent. Well, let's now get into all this with Lagos-based private equity fund Cardinal Stone Partners. We're joined by founding partner Femi Ogunjimi. Femi, great to have you with us on the show. Now, let's start off with all the reasons that investors are lured to Africa. They love the size of Africa's market, 1.2 billion. It's growing middle class, a large youth population, underdeveloped markets ripe for disruption. Do you agree that these realities are on ground are a bit more that the actual realities on ground are a bit more complicated?
Yes, Uche, I do agree that the realities are a bit more complicated, but that's the same for anywhere else in the world. It's not always just about the macros, but also about the micros that will make the business viable. So in the case of Nigeria, particularly, you find out that a lot of the infrastructural linkages are weak or are not in place. And so where you have 200 million people, it's usually difficult to pull those 200 million people together as one market. And so what we look at in CCA, for example, is what are the 100,000, 200,000 people that are going to make a viable case? Because you find out that most businesses don't need 200 million or even 50 million people anyway. They just need a small group of committed clientele to survive. So despite the fact that the headlines are there, it's also important to look at the macros of the business case.
And you're actually a private equity fund that invests in markets such as Nigeria and Ghana. So what is the criteria that you look for when investing in African startups? Is it the founder? What are the fundamentals? And is there a more nuanced approach from local investors like you?
So I think good question. It's always, first of all, going to be about the founders and the promoters, right? Because in this kind of markets, like anywhere else, things always change. So you want a founder that can essentially get into a business marriage with you, so to say. And for that period you're investing, you guys are together in there. Your goals are the same. Where you want to take the business to is the same. And more importantly, you're looking for founders that can pivot at the right time when things are difficult to do the right things. So that's number one. Take, for example, the case of AppZone, one of our businesses, which is a leading enterprise tech business in Nigeria. The founders there are three people that have been together for 12 years. They've numbed and stomped together. And by the time we met them, they were a solid, formidable team together. So after founders and promoters, the next thing is the industry, the position of the business in the industry, its competitive mode. How does it position itself such that other people are not able to take its market share, to be able to take other people's market share? And then finally, we then start looking at things like the general macros around that space.
But what about the fundamentals on the ground? Because questions have been raised about uncertain or non-existent data. People also pointing to inflated company evaluations when we talk about these firms. Are these valid concerns? What is the root of some of these issues when we talk about inflated company valuations, for example?
So I think there's clearly problem with data, but this is not unique to the markets we operate in alone, but perhaps a bit exaggerated in our markets. But the fact is this, when we look at the opportunity set, when we look at what is out there for the kind of population that is out there, and the fact that a lot of our basic infrastructure is not in place, it makes a case for technology to leapfrog. And that is why a lot of tech businesses are able to reach a lot more people and much faster. Now, obviously, you can't look at what the business did last year and 2 years ago and assume that it's always going to do the same going forward. But there is a clear business case that a lot of viable businesses, if they are well run, will be able to justify the valuation if it's not already justified. I think it's a case by case basis, and one just needs to look at the fundamentals around each business and the expectations going forward.
Well, the reality is there have been some ripples through Africa's tech space. When we look at like Jumia, for example, and its valuation, Flutterwave, what comes to mind as well. So when we look at the sector going forward, analysts say they expect funding to exceed the record 5 billion that was raised last year, and that's only if the trends that we see today continue. But do you expect to see these trends continue given what's recently happening, even as the global economy is slowing down as well?
So yes, I do expect the trend to continue. I can't put a specific number to it, but I think there will continue to be a robust financial market, funding markets. And I can take it, for example, from a PE perspective, where we continue to see viable businesses that are solving real life problems. We will continue to invest in those businesses as long as they continue to solve those problems. And so even though there are things that have happened that people may question, again, it falls to case by case. You need to look at the fundamentals around the business. What it takes a business to get the first 100 customers, it's not what it's going to take it to get the first 1,000 or the first 100,000 customers. And so it's all about fundamentals. And so what you may find out is that investors are looking a bit closer, but when they see the opportunity, they will continue to fund. And there are a lot of businesses with the right business case. And
And
so, yes, I do expect
very quickly,
it to
before we
continue.
leave you, Femi, what about regulation? Because regulators are also looking a lot closer at these companies.
Yes, so I think this space is new for everyone, and I think regulators are trying to catch up in many ways, and I think the market will continue to learn. The good thing is, generally speaking, you have regulators that when they settle down and focus on it, they know what to do, and so we're seeing a lot more regulators beginning to look at that space, those spaces, businesses that were a year or two ago much smaller and didn't catch their attention are growing at a fast pace. And so regulators are really putting a lot of attention there. I think what we're going to see is that regulation will catch up and the industry will kind of clean up, so to speak, and we'll continue to see that growth in terms of the businesses and the regulations along with it.